Maybe while everybody comes on, I'm nervous to play the audio, but maybe I can just recite some of it to you. It won't go on long, but just to give people time to come on. Ham's already had a call. I don't expect him to come on, but he's welcome to. But he already had a call this morning. So if you're expecting that, you might have to temper your expectations. Stocks are going up today, which is great. Of course, I'm not going to be able to find that. All right, I guess I won't find it then. Let me look one more time. Let me just look one more time. Depression. Oh, there it is. Okay. Let's make sure it comes up here. Change this. Let me change this. All right, let me change this. Settings. Bluetooth. Okay. All right. Okay. Now it's the wrong speed. All right, I won't take long with this, but I just saw this. I don't know if it's true. The title is China's 5-star hotels are finished. Another big hotel is closed. Business too difficult. They're showing people just buying the crap. China's 5-star hotel industry is struggling. All sorts of crap for sale. Waldorf Astoria being sold. The Westin auctioned off. Bulgari, Sofitel, Ritz-Carlton, all out of business. Hotel occupancy, single digits. Sometimes, some nights, no rooms at all. All right, that's enough of that. Not a single hotel room occupied some nights. Something's going on. Something is going on. All right, let me get some quotes for you. I have to sign in here because I was signed in there, but all the stocks are up. Poor Rachel Zegler. She's being discriminated against. Okay, I'll go through the stocks. I'm going to try not to be on until 4 o'clock. So, all right, GBUX was the most active this morning in terms of price action. It is. I don't know why sorry about that. I guess you didn't hear me. GBUX is up 86 cents. It's the most successful today in terms of price action so far. The high on the day was 655, and right now the bid is 586 as 618. Sorry, 616. Finger is 164, 163 to 165. The high was 171.99, and the volume's 200,000, which is pretty strong for Finger. NIXX is up a penny at 222. Railtown is up a penny at 29 cents. Magoo is up $3 at $17. Let me see how high that was today. That was as high as 1968. So some squeezes are happening, so-called squeezes. HUHU is down 75 cents. And then what else do I have here? I guess in honor of Stony Bones, we can look at GameStop. GameStop is down 48 cents at 25. I thought about what I think he was really pissed off at me yesterday and said some choice words, but I think what he might have meant was I was criticizing GameStop's financials, and I think what he may have meant by his comments was a lot of the stocks that I've talked about have bad financials. And he's got a point there. But the difference is, to me, well, there's two differences. One, back 3 years ago, I still believed, like others do, like this guy from the Amex, I think Ham does too, that Wall Street still behaves like it used to do. I now think it doesn't. I do think short squeezes happen. I do think there's a cost. People get caught out. But I don't think there's a compliance officer anywhere forcing buy-ins or making sure that deadlines are met. So it's the pressure people are putting on because of MMAT and MMTLP. It's the pressure Ham puts on. It's the pressure of sudden surprises. And I just don't think GME has a sudden surprise. So those are my two caveats. One is I no longer think the way I did 3 years ago. I do not believe buy-ins occur or sellouts occur the way they used to. And it's cost me a lot of money to find that out. The second thing is I don't think there's any surprise in GME. In fact, I wouldn't. If someone told me that Roaring Kitty and some of the promoters of GME are actually working on behalf of the shorts, I wouldn't be able to refute them. It seems to me that GME is giving Cohen $20 a share, maybe $25 a share premium. So you're paying $25 a share premium for how great Cohen is. I think that's a bad bet. He may be great, but he still puts his pants on two legs at a time or one leg at a time. And his dream is to, I don't know, live out his years comfortably. But I think Stony Bones has a good point that these other companies like CRTD crap, GTII crap, you know the rest of the names, just bad financials. And then they were truly short plays, short squeeze maybe plays. I don't think GME is. And I guess that's the difference of opinion I have with Stony Bones. I think you're very fortunate to have $20, $25 premium in GME stock. It gives you a lot of time to get out of that stock. And that's what I would do. I'm not saying sell here. You sell when you want to. Maybe there'll be another rally. But I would definitely get out of GME before the Cohen premium is gone, because there's a Cohen premium. And he's very fortunate to have this massive following worldwide that hangs on to every grunt of Roaring Kitty. There's nothing there, guys. There's nothing there. But that's my opinion. It's my opinion. Yeah, Frankie, let me see if it's here, because I did mean to have it here. It is. Okay. So I don't want to lose. Let me go over that. I just have to go get it is the only problem. And if I got it good, I might lose you, which some of you wouldn't mind. Some of you wouldn't mind if I went away. Since you went away, since you went away. All right, let me get it for you, Frankie, if I can find it. Let's go unos, dos, tres. I'll do tres. I'll do cuatros, if that's a word. If it's a word. I look a little like the really bad scenes of Richard Harris at the end of his life. His white hair was flowing like mine does, out of control. Okay. So he said, NIXX, please read. And he lists a whole bunch of stocks. Read my analyst report in his feed, which you can go to on Twitter, Chris Lecoisier. And he follows several stocks, and then there's NIXX. But then this is the breakout of that, which is a little easier to read. Let me come back to comments and remove you, Frankie. Oh, no, I can leave you there. You're not covering anything. NIXX stock update. I just sat in on a 1 hour conference call, kind of a fly on the wall. This is from Chris Lacoisier. Venture capital investors, future institutional investors. What I can say is, as news unfolds, I will be holding my position. My plans were to trade out of the stock at $10, $15, but after today's conference call, I am long the stock, believing the company, NIXX, will be profitable in the coming quarter. Understand profitability is actually rare in small cap investing. Making a profit on a trade is even rarer. NIXX will be profitable in my opinion. After the second quarter, news is imminent, and the company will update investors as news and revenues expand. Possibly every other week. As I have noted before, there are over 3 million shares short in the real short, I guess he means. And that does not count the naked short. Long investors have lent that stock approximately 2.8 million shares. So of that short, long investors have actually lent out 2.8 million shares. It's his judgment that these shares will be pulled from the stock loan program when the long investors wish. And this may occur when NIXX is above $2.90 a share. It is believed that at approximately $3 a share, prime brokers will force the buy-in of NIXX stock. Obviously, that's everybody's opinion. There's no guarantee. As I said before, I am long the stock, anticipating a price of $24 a share by the end of the summer 2025. I will say if a squeeze happens, I'll get out of the stock. I never promised you a rose garden, but along with the rain sometime. No, he says, note, I never said who the conference call was with. So how's that, Frankie? How's that to be responsive? GBUX is percolating. Ham isn't on. He's welcome on, but he already had his call this morning. I didn't know about it, so I didn't go on it. But I understand it was an excellent call, and people are buying Finger because of it. All right. So Big JR is here. Big JR always has. He got rejected. Just get in there and ask her out again. Don't take rejection. She doesn't know what she wants. She wants you. So I'm going to ask Big JR this question. What do you think this means? What do you think this means? The Coinage Act. Donald Trump put out America Liberation Day. 1792, the U.S. Coinage Act was passed by Congress, establishing the United States Mint and authorizing the production of the U.S. dollar. a foundational moment for the nation's economy. What do you think, Big JR, that means? Why is he putting that out? I mean, since you're not responding with any kind of speed, I'll tell you what I think it might mean. He might be finishing the job that JFK got moitered for, which is get rid of the Fed. Maybe Trump is fed up with the Fed. Coins in circulation are directly issued by the Treasury Department. Your paper dollar bills and $20 bills and $50 bills and $100 bills, those are Federal Reserve notes. They're just credit. They're just credit. They're not anything except a con job, a confidence game, and we all buy into it. We do. And we measure our, like, I told you I sold, I have I'm sorry to say, my my resources to trade with are very small, and they're largely, well, they are. It's my IRA. So I told you when I did it, I sold a little bit of Railtown to buy GBUX. And of course, everything, nothing's perfect. But I was thinking about it this morning. I'm going, oh my gosh, Railtown's up. And GBUX is up. But I bet I'm going to still lose on one, and I'm going to have to buy Railtown higher, and so I'm thinking in dollar terms of losing here, losing there. But what I really should be thinking about is how many shares of Railtown did I sell? And if I'm able to sell GBUX at a profit, how many shares of Railtown will I be able to buy? Not what the price is, but will I be able to buy more shares of an asset? And stop measuring things in terms of dollar price. That's what I got to learn to do. What did Big JR say? Let me say Big JR's April 2nd is supposed to be Tariff Deadlines Day. Yeah, that's true. But why did he mention the act? Let me bring it back up. I can't even, I have such a short memory. My Biden memory is so short. Why did he bring up the U.S. Coinage Act? And that doesn't have anything to do with tariffs. I think he's making the clear distinction that the U.S. Mint can produce money. I don't know. As usual, I may be trying to see more that's there than actually is, but I don't see the connection between the Coinage Act and tariffs. This is not a bad take. It's a shot across the bow at the Fed. Yeah, that's not a bad concept either. Barbara, not bad after the sun is out. All right. The only other piece of something I wanted to show you, I'm going to be quick with this. I'm not going to stay on it. But there's a gentleman that comes on here. almost every day, but he didn't yesterday and he hasn't so far today, and I might preempt him here. But he tells you to buy Pfizer. Um, I'm not making a comment one way or the other about anything. I'm just saying this came out from the Children's Health Defense Organization. Quote, an admission of epic proportion, this is out of Canada, confirms, I'm not sure I can finish that sentence, on YouTube. In this great country of freedom of speech, I cannot finish that sentence. So it's an admission of epic proportion. Health Canada confirms something concerning. And then up here, I circled it in yellow. Health Canada on Thursday confirmed some concerning results in Pfizer products. And Pfizer did not disclose these concerns to the public health authority. So I'm just calling your attention. Pfizer has a dividend. The United States gave immunity to Pfizer for some reason. I don't know if Canada did. I have no idea. But I would just be careful of, well, I'll let you draw your own conclusions. Roth still coming out with report. Big JR. Yeah, I'm sure Roth will come out with a report, but look, Ricky, my experience was that analysts worked with a Chinese wall. They could not tell investment bankers, they could not tell the sales side of the organization when or what the report was going to say. Now, it's possible that because several people from Finger Motion were at the Roth Capital conference, that Chinese wall got a little bit rubbly and fallen down right then briefly. So maybe they heard some things. But you're not, my judgment, asking about that every day, you're not going to know. The company has given strong indications that there is going to be a Roth report. What is going to change that's going to, all of a sudden, they're not going to do a Roth report? I don't know. But my opinion is nobody really knows the answer to your question. If a report comes out, my guess it will be either Finger Motion will trade in line with the market, or it might be a buy. But my belief is the target is going to be, oh gosh, I would have said $2, but we're already close to that. But something like that, $2, $2.50. But that's just my view of how analysts work. And then they'll raise it. They want to hit their targets, pat themselves on the back, and they'll raise it as circumstances warrant. But a research report Ricky, I think there's a chance that Finger Motion is going to seek further financing. We don't know that. We've heard that a large institution is investing. We've heard a company might take a stake. These are rumors, I have to emphasize, but I think it's pretty clear from the pace of the development of the heavily capital intensive C2 contract, the vehicular, as they say in the South, the emergency vehicles contract, they're going to need money. Ricky, they're going from 2, which they build out, and then it takes 90 days to receive money, to how many ever they're able to build with 5 million in December. Takes a while to build that out, and then it takes 90 days to 120 days to receive money from the government. So how are they going to fund new contracts? There's only 3 ways. They raise money in equity, they borrow money, or they do a joint venture in some fashion with the company providing the vehicles, whereby they provide the credit. They forbear payment for a period of 9 months. They take a stake in the company. But Ricky, in order to get what is an extraordinarily exciting contract to the self-funding, the set it and forget it stage of we can finance anything the government gives to us by the next quarter's receipts, they need some money. So I think you have to at least accept the possibility that Roth Capital may raise more money for finger motion. I haven't heard that from anybody. That's just my skepticism of that's the wrong word. It's just my critical eye. But I tell you what, the best thing, which I think would be good for SAIC, is if they entered into an agreement to advance the vehicles and pay for the labor costs for 9 months, essentially carry finger in return for a stake in the company. That would be fantastic for everybody. That would be a dynamic change in the story, and that would cause a really powerful research report. But I don't know, Ricky, research reports just like approvals from the SEC, analysts want to be right. They want to see the earnings. They want to see some detail. They're not just going to put it out there to put it out there. And so we might have to wait. But if I were to kind of suss out what might be going on, is I bet the analyst is ready to make her report, and the institutional salesman and maybe retail at Roth Capital might have a brief paragraph recommendation they're looking at, but they're not ready yet. And obviously, and the 2 things that I think are important, Ricky, I don't know why this is hard to understand, but earnings probably are coming out April 15th. It could be sooner. I would think they might want to see those numbers. Maybe they'll go beforehand, but you have to consider the possibility that the analyst wants that to be released. You just have to consider that they want to see the 4th quarter. The other thing is, it is quite likely that finger motion, I haven't spoken to anybody about this, but it's quite likely that Finger Motion is in negotiations to finance further growth in their vehicle contract. If those negotiations are fluid, an analyst is probably going to wish to wait till there's some certainty. Asking whether or not Roth is still coming out with a report misses that nuance, but it's, yes, they will come out with a report. They will come out with a report. They will. Yes is my answer. It's a long answer, but yes. Big JR. I asked my new date to meet me at the gym, but she never showed up. That's when I knew we weren't going to work out. It's so bad. I saw one the other night. I drove to the graveyard for a funeral, and I had a really bad feeling when the GPS told me I had reached my final destination. It's as bad as yours. Is there a fourth way that Roth exchanges their warrants? No, I don't think so. Not at these prices. I mean, eventually that could happen. But they, correct me if I'm wrong, but I think they still have almost 5 years on those warrants. They're priced at $1.50. I think that'd be a bad allocation of capital. Overpaid wankers, what they do, and venture firms, this is what they used to do. Now they just have complete license to sell stock that doesn't exist. No one enforces the rules. But what they used to do is, and it was pretty clever. Let's say you had a small fund. You had a $10 million fund or a $50 million fund, relatively small in the world of venture firms. But you wanted to participate. Your focus was in Chinese stocks, Southeast Asian stocks, I don't know, whatever you want to call Finger Motion, telecommunication stocks. And so you want to receive a phone call whenever there's a deal offered, so you do the deals. And when the deal comes, you do a little due diligence and you say, all right, I'll take I don't know, 1 million, and as long as there's warrants. And so you got the shares. Now, this never used to happen when you had an honest Wall Street. I mean, it might have happened on the margin. I think it did happen from foreign accounts. They had a safe harbor. It was called Reg H, maybe F, G, D, something in that range. But I know it happened from offshore because it couldn't be enforced. But it was a small part of every offering. So I do think that hedge funds, I used to have accounts like this. They would DVP IPOs or secondaries, and I'd get a big order. And lots of times I was told I could not place, if I were given shares, I could not place it with a DVP account. So, they may call in a hedge fund out of San Francisco. Hey, Billy,
Billy, do you have any? Yeah. All right, put us down for. We'll take 10,000 shares. Well, I never got 10,000 shares. Hey, uh, Steve, I have 500 shares for you. All right, Billy, we'll take them. We'll take them. And then the phone's gone. Well, as soon as they got the stock was priced and started trading, I know they sold the stock. They sold it. Boom. It's out of there. They've locked in the profit, the break even, or even a small loss. And then as soon as I give the shares to their account, it's DVP'd. It's delivered versus payment. They wire the money and the stock's out of my account and it's in their account. It's settling up the trade. Well, what these accounts would do all day long, they would do that. But that's on IPOs and secondaries. If there were a placement, they would try to do something like that, particularly if it's a trading stock. So they'd sell the stock as soon as it's priced, as soon as they get it, up, down. They might hold it a bit to get it up, whatever. And then they'd keep the warrants. So if they got 1 million shares, they sell the 1 million shares. Maybe they made a penny on it, made 10 grand. That's gone. But they have the warrants. The warrants they have in their account for the upside for free. Now they take that money and they go do the next deal. And the next deal's the same story. They do 500,000 shares. They get warrants. They quickly sell out of that stock. And maybe they have a loss, break even, gain, they don't care, and they keep the warrants. And they build a portfolio that way of warrants they can trade, but they need their capital so they can continuously participate in deal after deal after deal. And the key is never to have dead money, never to have dead money. And the way the firm I worked for would try to control some of my behavior, and I was just one of the top brokers in my office, would be, well, if you put this with a DVP account, and by the way, back then, they could track the shares, and we see that it's sold, you're not getting any commission. Now, I wasn't always I wanted to make money, of course, but I always put my investor first, so that that's why, no one ever married me, I guess. But if the stock looked like it was going to break down, I would say, all right, sell it. And I wouldn't get my commission. So, but on the other hand, the client didn't lose money. But my point is, nowadays, son of what, this deal with finger motion, apparently, if you look at, I didn't do the arithmetic, somebody told me these numbers, but if you look at the arithmetic, Anson funds did like 85% of the Roth Capital deal, which confirms my suspicion that Roth Capital just acted as a flow through to cover the shorts, to help the shorts. Roth Capital did a crappy deal supporting the aftermarket. The stock was $270 and they placed it at $1.50. Somebody just sold the stock and gave Finger Motion its own money. Probably Ensign funds. But anyway, my point is, Roth Capital in that $1.50 deal, their client was the biggest abuser of shorts on Wall Street, Anson funds. So who's their client? Finger or Anson funds? I'll let you make your own determination. I know where I stand on that. But having said that, I think Roth Capital has honest people working as their salesmen, as their institutional brokers, and as their retail brokers. This gamemanship goes on probably with the knowledge of I would guess investment banking. I would guess the stock loan department. I would guess the prime brokerage side, the prime brokerage side. There's got to be a compliance officer somewhere on the prime brokerage side that knows that the attorneys and the paperwork filed on behalf of the Anson Funds clients are eliding the SEC rules. But anyway, everybody agrees to look the other way, including the SEC, because they're good clients. And it's just it's a consequence of the competitiveness of Wall Street. It's the acquisitive, the pushing the boundaries nature of these trading firms. They just push and push and push over the years. It's the flow of money to Congress, the lobbying firms. It's the you got to call I'm not going to use that expression actually. You've got to assess blame where it should be. It was the Obama's administration. He was no FDR. Roosevelt said, I welcome their hatred as he went against the banksters. Obama, he's worth 100 million if he's worth 1 million. He got paid off. So he oversaw with the head of Goldman Sachs having first view and Morgan Stanley, I think. They separated the banks. They separated them into where you give the backing for FDIC insurance, and then they have their prime brokers. And that happened in 2008 under Obama. And since then, there's no attempt to settle trades, police as the securities laws. So there's an endless amount of selling. So anyway, son of what, my description of what used to happen probably doesn't apply anymore. I think it's more likely that 1.5 warrant coverage, which is very high, with a 5-year duration, which is very long, with a strike price at $1.50, which is zero premium to the deal, I think is there to help the shorts, the Anson funds. And I think they shorted more stock. I think there were day traders that came in. They came on here briefly. The day traders only come in here to be shills when they have a position. And once they move from LLC to another, or they close their trade for a profit, they disappear. They're just here to FUD you for a little while, see if you'll sell them some stock. So know what, Roth, those $1.50 warrants, Roth Capital doesn't even own them. Anson Funds does. Anson Funds. That is the hard work that Roth Capital did. Roth Capital's hard work was to call a criminal set of funds and raise apparently 85% of the money with one phone call to the fund group that probably works with Lynn Partners. There's certainly Lavoisier, Philippe, le cheater at Lynn Partners is from Toronto or from Montreal. I think he's from Toronto. That's the home of the Anson funds. Do you think it's coincidence? Philippe is in Lynn Partners. Do you think that's a coincidence? You know, I point out patterns and people get mad at me, but this is a war and they don't care about you. They do not care about you. They want you to spend your money, get the stock up, but they want to take it. There was a post on Twitter 2 years ago. Let's have some fun at retail's expense. They consider themselves sophisticated. They're just criminals. They're just criminals. And they have no risk. That's what the warrants are there for, son of what? So they have no risk. They sold down the stock price under $1.50 with no risk. They had a defined backstop of $1.50 a share. Now, where the lying comes in, where the lawyers come in, where the looking the other way comes in from each of the prime brokers, and where the stock loan department gets rich, and where I think the model is that they're imitating the fractional reserve commercial banking system, and they're creating a fractional reserve security. I don't know what to call it, a fractional reserve security investment banking system, a fractional reserve security custodial system, a fractional reserve security trading system. I don't know what to call it. But to me, to my eyes, it's identical, as they say in upstate New York, or used to. Adams, apparently. Adams, New York, where I've been once in my life, in a snowstorm, a whiteout. They multiply the amount of shares that they can sell using that same number of warrants multiple times with multiple prime brokers. And each prime broker plays the fool. They know what's going on, but they pretend not to know. And they have a lawyer that's assured them with a lawyer's letter, confidence letter, or whatever it's called. They have a name for it. And the lawyer says, my client has a warrant for 7,500,000, or whatever it works out to, 5 million shares of finger motion at $1.50, whatever the number is. And then the prime broker says, all right, we'll let you sell that stock. Just make sure you borrow it from our desk. And that's what happens. The desk says, all right, we have that letter. We'll let you sell 5 million shares. We have this letter from your attorney saying that you have this number of warrants. And then they provide that to multiple accounts. And the sting is on. The games begin. The stealing, the onslaught of selling and trading. And then they come here and they call me a shill. No, they call me a pumper. And then they call me all sorts of names. They're selling stock they have no risk on. Worst case, they sell it down to 75 cents and it suddenly opens at 7.50. They go to their prime broker who lent them the shares versus the lawyer's letter. They say, hey, give me my 5 million warrants. And then it becomes a scramble. But you know what happens, as you've learned in MMTLP, you've learned in MMAT, you've learned in GTII, you've learned in Vocal, MULN. They just buy time. They just buy time. Lawyers are good at that. Lawyers are good at that. They're also good down deep. William, I thought you and Ham said Martin is well aware how Wall Street and the crooks worked since they paid off the other toxic note. So why do another bad deal, as you're saying about Roth? Well, it's asking a lot of a CEO. I don't blame CEOs. And unless they're corrupt and unless they're part of it, look at a CEO like the guy that runs MMA. I've never met him, but I can imagine he's a scientific, lovable tinkerer, and he has ideas like the mad professor, and he's always excited by his new idea, and he turns concepts into inventions. I bet he's a great guy. Why should he have to understand the intricacies of the fraud which is pushed onto Wall Street with the cooperation of the SEC, with the support of Van Wagner, with the support of the exchanges? Why should he have to know? He assumes it's honest. So he gets in a lot of trouble. His board backs him up. You do a deal with Aubrey Advisors. They put 2 people on the board, and I wrote letters. It made me the biggest arsehole in the group. I said, your stock's going under $1. I bet it goes to a penny. In anger, I said that to my memory. Well, it's a penny. Why? Because they put the board members, they're all these people, they went to the right schools, they dress well, they have the nice cars, beautiful wife, they're members of the clubs. I guess the guy's from Iran and he lives in Switzerland, so that makes him a good guy. But my opinion, anybody from Iran is scheming to screw the markets and screw investors. Not anyone, but many. Just like out of Lebanon, you would run into people from Lebanon, just like Nigeria, come in with these big stories. You got to be on the alert. If you're not on the alert, it just said sucker across your forehead. But back to Martin. Martin did a deal with Jeffrey Lind, and was it also 5 million? I can't remember. And that set in place the avalanche of counterfeiting in finger motion stock. Now, Jeffrey Lind's office is on, I can't remember the address, but I think it's 6th Avenue. I've been in front of it. I didn't go inside, but it's a beautiful building. And so if you visit, I'm sure it's quite a hell of a presentation. And Martin needed the money at the time to buy minutes for the top-up business. And I think he used the $5 million quite effectively. However, it caused the destruction in his share price. And that's never gone away. Apparently, anecdotally, I heard it third hand, Jeffrey Lynn told one of the CEOs that when he places stock, he places it to 4 hedge funds, and one of them might be a short seller. I think it's Anson funds. But it doesn't matter. They all know each other. They all work together. They may not trust each other, as one guy alerted me, but they know that if they cooperate with each other, they're all going to make money. So, yes, Martin ended up hiring Wes Christian, and they bought back that note. But that didn't stop the short selling. That didn't scare little Bill, did it? Why? Because the avalanche of selling had already happened. There was already such an overhang of shares sold that didn't exist that for all practical purposes, the public now the stated public float and the stated public shares, you know what those are. But the public trading, supply and demand curves, the supply got moved to the right. I'm trying to remember how the supply and demand curves are drawn. It might have been moved up, but I think it's anyway. The supply is greater, and they had already accomplished that because David, the key is to use the toxic convertible note, get your attorney to take that note, provide it to the prime broker. The prime broker says, okay, you can sell shares here. And they loan the stock based on that attorney's letter. They're breaking the law because you're not supposed to sell stock that's going to be delivered in 6 months. But the attorney's letter gives the protection. Everyone's covering their ass. No one's digging too deeply. And they take that letter and they go to someone else and someone else and someone else. And eventually it just comes a point where they take phone calls from each other and the paperwork isn't as carefully filed. But it's that's the purpose of the toxic convertible note, is to multiply the amount of shares they can sell without raising alarm bells. Well, when Wes Christian fought and got that note repealed, recovered, redeemed. It did nothing to change the fact that 150 million shares of supply are out in the public market of finger motion. Didn't change that. So it didn't escare the shorts. Didn't change a thing. The damage had been done. some other things changed. The warrant as a special dividend, buying, the stock price going to 9, that started to change it. So they used other strategies to pop that bubble, and it worked. But those shares have not been bought back. The gentleman who so confidently told me from the American Stock Exchange there's systems in place and that they're covering, and that it's private placements. Well, he was wrong in collective audience, and I think he's wrong here. I never saw the buybacks. So, all right. I'm going to defend Martin a little bit on doing that deal with Lind Partners. He did get the $5 million. He did destroy his stock price, but he didn't know that. He assumed that the markets are honest. They're not. But he, unlike other CEOs, Martin had a specific purpose for that $5 million, and it was low margin, very low margin, grocery store margins. But he put $5 million, or what, he had some overhead, but he put $5 million into buying minutes, and he sold those minutes almost immediately. He put those proceeds back into buying minutes, and he sold those minutes. And he did it over and over and over and over and over again, always taking a reasonably safe profit over and over and over and over again. And eventually he was able to attract an investor who said, you know what, let's buy out Lind Partners. So I think he used the money carefully and wisely. But now you ask, why did he do a deal with Roth Capital? Most people out there won't tell you what I'm telling you, my opinion of Roth Capital. Oh, it's a great firm. Oh, they're great. They're big. They're New York City. It's awesome. I know people that work there. It's great. And I'm not, by the way, I'm not picking on Ham. I'm talking about, look, anyway, I've known of and been involved with and been to Roth Capital over my period of time. I don't think I ever attended a conference, but I've met people from Roth Capital. I've screened deals that investors did. So I'm telling you that there's a reputation out there that this is a real investment bank. There are no real investment banks for stocks under the Merrill Lynch rule, under the institutional cutoff. There aren't any. They're just fronts to sell the company's stock that doesn't exist and give the company their own money back via short sellers. It's all criminal. You don't think that Martin Shen could have raised the money at $2.70? Well, it was $2.70. Let's say he had to give a discount of 10% to raise money. Let's say he had to give a discount of 20%. You don't think Martin could have raised money at $2.10, $2.15 all day long on his own? Of course he could. Of course he could. But his attorneys tell him, you better do it through an investment bank. His board tells him, you better do it through an investment bank. He meets the investment bank. practice liars, all of them. Some of the people are honest. How do you tell? How do you tell? What do you need? Well, we need 5 million. Well, how come Univest didn't give you 5 million? Well, they haven't done anything for us. Well, we'll get it done. You think the Anson Funds isn't a client of Univest? You think by switching to Roth Capital, Martin found new investors? He didn't. He found Anson Funds all over again. But he didn't know it. He didn't know it. He didn't know it. And Roth Capital, here's the new pitch is, we're not going to do a toxic convertible. We're not going to have a backward-looking formula in our raise. We'll give you the money all at once. All we want is warrants. But it's the same scam. It's the same lie. You need to lie. They lie. It's like a guy picking up a chick. If you lie, you're going to get laid. If you have integrity, it's a little more difficult. But the woman can't tell the difference. She can never tell until afterward. And then she's mad at the guy. Of course, it's 2 months later, 3 months later. They're very practiced liars, these investment banks. And they don't make any money anymore because there is no market anymore. There's no market makers. There's no research. There's no trading desks. There's no retail brokerage firms that buy these stocks. There's no institutions. They don't make money. The only way they make money is to facilitate the crossing of stock that is sold that doesn't exist. So they cross the money raised by criminals, protected by Congress, protected by lawyers, protected by regulators, protected by your own firm. They take that money, they take the company's own money. Look at the case of Finger Motion. The stock was selling at 270. This is how good an investment bank Roth Capital was. They did the deal at 150. Do you think they did any work? Do you think they made any sales calls? Do you think they did a road show? Do you think they put a detailed presentation together? No, they called Anson Funds. Anson Funds sold it from 270 down to 140. They did the deal at 150. Roth Capital is a crap investment bank. That's my opinion. It's my opinion. They exist. They make their money from Anson Funds. They don't care about Finger Motion. Now, that's not the whole people that work there. That's not everybody. That's just how many ever it takes to fulfill this so-called business model. It's criminal. I mean, if you look at it from Roth Capital standpoint, they survived the concentration of asset managers and the buying of all the brokerage firms into four. Bank of America Merrill Lynch, Morgan Stanley, Wells Fargo, whoever owns them, and I guess UBS still owns Payne Weber and I don't know. And then there's RBC, Dane Rauscher. anyway, there's four big firms. I'm losing track of who's who now. It used to be dozens of firms. Roth Capital has survived by catering to the funds so the criminals can do this activity. And it's all arm's length, and lawyers are in between, documents, precedent, SEC looks the other way. No one does anything wrong. It's all good. Anyway, so then you ask Martin to look to somehow see that. I think Martin, who was under an exclusive contract with Univest, so he couldn't do anything. Univest locked Martin into a banking relationship. They did nothing for him, but he was precluded from raising money himself. It's a shitty situation to be in. So he divorced Univest, and it took 30 days. And lo and behold, Roth Capital shows up. We can do it for you. It's the same clients. But Martin didn't know that. But they performed. But how hard is it? Hey, Jim Anson, whatever his name is, finger motion. You know it. They're raising $5 million. What do you need? Well, we'll do all of it. Well, I have some other orders. All right. We'll take everything you don't place. Tell us how much. They start selling because they have a market maker. They start selling at 270. They sell it all the way down. We just want warrants. So Martin took another crap deal, but it wasn't the same design. It's just a different design. Has all the same damage. But I will defend Martin. What was he supposed to do? He couldn't go talk to investors. I think he could have raised $5 million from us. But he couldn't do it because he had a deal with Mustafa. I had a deal with Mustafa. He had a deal with Univest. And then the Chinese holiday's coming, Christmas is coming, Hanukkah's coming. To the extent that it matters on Wall Street, Kwanzaa was arriving. New Year's was fast approaching. And he needed money to finance, and Anson Funds knew this, he needed money to finance his C2 contract, or he'd lose the contract. He has exclusivity on a government contract in China, which may or may not have 1.4 billion people, and it may or may not be the world's second largest economy. I don't know. I'm starting to wonder. But it's big. Well, what's his choice? I'm going to go call. I'm not going to do a deal with Roth Capital. I'm going to do it myself. It's 3 weeks to Christmas, 2.5 weeks to Hanukkah, 3 weeks to Kwanzaa, 4 weeks to New Year's, 6 weeks to Chinese New Year's, Yeah, I'm going to go raise that money myself. It's a bad decision, a really bad decision. So he did the deal with Roth Capital. He didn't know, but now he knows what Roth Capital does. Now he knows. I gave Roth Capital time before I called it the way I see it, because they did a crap job supporting that offering. Now, what did Martin do with that money? Well, there's where I think Martin stands out as a CEO. He took the money, minus a little bit here and there, some for the insurances, some for the cloud, but he took the preponderance of that money and he put it into the C2 contract. Bravo. He didn't spend it on himself. He didn't steal it. He didn't give it to a charity. He didn't chase some lark in, some other industry. He focused and he got it done. And he withstood the slings and arrows. The stock was under pressure. They did everything they could, Anson Funds, with the help of Roth Capital. Shitty deal. They tried to get it under $1, and Ham fought it, you fought it, and Martin fought it. Martin fought it. Martin went to conferences. Martin gave interviews. And Martin's using the money to create shareholder value. I don't know what choice he had. I think he did the right thing. I think he did the right thing. Otherwise, he'd be raising money at 25 cents right now. So I actually think your statement is correct. Martin does know what he's up against. And he said, I'm just going to take this, because if I don't, and I do it after Christmas, after Hanukkah, after Kwanzaa, after New Year's, after Chinese New Year's, who the hell knows what price I'm going to do this at? It could be 40 cents. And then I'm going to dilute the hell out of the company. And then I'm going to be like MULN. I'm going to be like MMAT. I'm going to be like Vocal. I'll never recover. So I think Martin did the right thing. I really do. The problem isn't the CEO. The problem isn't taking the money per se. And I think Martin should have tried, and I think he still should try to raise money on his own and eschew Wall Street. The problem is that Wall Street, for companies that are under $5, under $7 a share, under $1 billion, maybe a $2 billion market cap, all of the players are like Harrah's or Bally's casino. The Adina Friedman is the floor walker. Robert Cook is the fat arse that sits in the counting room. Chuck E. Cheese Cromwell runs the concessions, the kitchen and the commissary. Goober Gensler, he's at the front desk if you need a room comped. Ann Wagner, she's just there as the critic, the food critic, and the press person. I don't know who else there is. Any of the people in Congress, maybe they are the ones that run they oversee it. And then there's the DTC. They're like the guys that sit in Chicago eating pizza, smoking cigars, but they're not allowed in Nevada. They're enforcing the crime because it helps Goldman Sachs. You are the ones that come in, ding, 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 ding. Me too. I'm the one that comes in with a trading system. I'm going to go sit at the roulette table, and I know if I can do this like James Bond, I'll make some money. But the ding, 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 the spinning and the and all that, and the oxygen, and there's no clocks on the wall, and you can't see the sun, and the girls come around with cocktails. That's all to get you to think you're in the greatest place in the world. That's the research reports. That's the great online account. That's the incentives. You can trade without commission. That's the every time you trade, you get your money right away. That's the jolt of excitement when Roaring Kitty comes on. That's the focused pumping that's done on Twitter. It's all to get you excited to put up your money, and you think there's some rules. There are rules for you, but there's no risk. There's no risk. Virtually. I'd say there's less than 5% risk. And it's set up as a circle jerk with Anson Funds, Lind Partners, the regulators, the brokerage firms, the lawyers help out, their lawyers, and then the market makers who don't exist, the prime brokers, the stock loan desk. And it's all to strip you and the CEOs of wealth. They want to steal the entire market cap. And I think it's a lot to expect that CEOs know what they're walking into. Some do. And I think it's fair to say Martin should have known. But they just disguise their product now. They say, oh, we're not doing a formula. We're not giving a backward a discount. We're not doing this. This is at the market. That sounds good. I've seen documents on the at the market. It's all full of derivatives trading. It's all to protect the criminals, to protect the house. That's what these warrants are, to protect the house and the choice clients who fund the house. They're all part of it. The only reason that the Anson funds, Goldman Sachs, the offshore criminals aren't part of Wall Street is they maintain a facade. It's just a facade of regulatory supervision, of integrity, so they bring your money in, and it's not your trading money they're after. They want the money to come in retirement funds, in ETFs, in money that sits there dead, so they can purloin at their pleasure. Anson Funds, Jeff Lind, Ari Rubenstein, Yorkville, the Kramers, the attorney Nadich, they're all part of Wall Street. They're all part of Wall Street. What do they consume? They consume small cap companies. They consume cities. They consume tax bases. They consume CEOs. They consume shareholders. How the hell is Martin supposed to know? They have a really good product, Roth Capital. But Roth Capital doesn't have any investors. They just have Anson funds. There are no investors in stocks under $7, $5. There are no investors. There's no institutions that'll touch them. I'm sure there's an exception to that. There are no retail brokerage firms that will allow the purchase. But I defend Martin for taking the deal because he kept the exclusive contract. The stock now is on firm footing. And, there's some execution risk. But I think the stock is going to claw its way to $2, $2.50, $3. And I think the next time Martin takes money, he should contact us directly. I'll come out here and pitch it for him. He doesn't have to pay me a thing. But I think Ham could raise 5, 10, 20 million for Martin without the discount from 270 down to 150 and 1.5 coverage on warrants, and the money just goes to Anson funds. It's time for somebody like Ham, and it's certainly something I can do, to raise money for Martin with plain vanilla, honest equity. It's time to do that. Wall Street is all fraud, and Roth Capital is part of it. I'm sorry. They've just shown that they are. Now, I have a very good friend who works in the oil and gas side, and I would defend him to the end that he's honest. So I'm not condemning, 99% of the people that work there. But by their actions, all they did was pass through for Anson funds. That's all they did. Anyway, it's my opinion. I think if Martin hadn't taken the deal, we'd be looking at a 10-cent stock, 5-cent stock. So I think Martin did the right thing. I believe Martin did the right thing. And I think Ham is working his ass off to make sure that finger motion not only doesn't get destroyed by Anson Funds and Jeff Lind, that there is a home run here. The question is how long it takes. And there's still risks, it's all execution. But if there's one guy that works every day, it's Ham. And if there's another guy that works every day, it's Martin Shen. Why didn't he get money from China? But why come here? Well, it's an American firm. It's not a Chinese company. There were certain times where there were capital controls. I don't know if there still are capital controls on Chinese money. But I think it's a fair question. That's a question I used to get when I would bring American companies to London and to the Middle East. Why don't you effing raise the money in the United States? It's such a good deal. Why don't you raise it there? Well, I don't. It's not a bad question. But I think in the case of finger motion, they really thought they were going to raise money with Univest, and Univest didn't do anything. And it might be that Univest doesn't have the real clientele. Guys, I'm telling you, institutions don't buy stocks under $5. They just don't do it. No retail brokerage firms allows their brokers to solicit stocks under $5. Well, shame on him if he's done another Bad deal. I don't know. I think the difference is, David, that the truck contract, whatever this damn name is, the C2 contract, is growing. I've told you for months that finger motion has to have an identity. What does finger motion do? Number one. Number two, they have to have, and they have it right now, they have an exclusive contract. They have to have something they can put their weight on, which leads to my number two, which is they have to be able to tell the investment community that our revenues are growing, our revenues are predictable, our revenues are repeatable, and our revenues are not lumpy. Our revenues are leading to cash flow and profitability. If they do that, if they have an identity and clear numbers, the stock's on a whole different trajectory. And I think that's what Martin did, David. I think that's what Martin did. But you have to know that there's a risk he's going to raise more money. And my opinion, if he raises the money with Roth Capital, it's just going to be a handoff dancing funds again. It's a nightmare. Wall Street's a nightmare. And that's why I think that Donald Trump should attack, I think he should nationalize NASDAQ and the over-the-counter markets. And he should put Anna, Queen of Trades, or Jenny L, or Busy Brands, or Junk Savvy in charge of it. And then bring back the uptick rule, bring back full disclosure, bring back real market makers, bring back trading desks, bring back road shows, bring back maintenance of research coverage on anything you raise money for, settle every trades, get rid of short selling, get rid of any exceptions, no exceptions. You're not allowed to buy stock unless your cash is ready to trade. Nobody can sell stock unless it's in their account. I think they should do it all type 1. No street name. None. No street name. Do it for the stocks that are under $10. Do it for the stocks that are under $2 billion. No offshore trading. And then Donald Trump could rebuild America. He could make our markets great again. Pittsburgh could be great again. Altoona could be great again. Bakersfield could be great again. Tax revenues could be great again. Shareholders could be great again. I don't think investors are going to be screwed in finger motion if they execute their plan. The problem with building vehicular products matched with data is it's outside of their ken. You need assembly lines, you need efficiency experts, you need personnel. Personnel's for idiots. Actually, arseholes. I worked in personnel, Callahan. Yeah. I think the truck contract changes the PE ratio and the metrics that would be given to finger motion if that's the only item they have on their plate. This is why, David, I think it's a completely logical hookup. No one's told me this. I've discussed it with a friend of mine, and he shared his idea on it and his experiences. But otherwise, I haven't spoken to anybody. But it makes complete sense that SAIC would take over the mechanics of this fulfillment of the contract in return for a piece of the company. That's my opinion. And I think that'll probably happen. Where you get the huge growth in finger motion is going to come from its data. It'll come from this truck business and drone business, but it could come from data and it could come from insurance, the insurance policies and other things. Those have the huge, data has the huge multiples. AI, that has the huge multiples. And it's coming. I think it can come. I think Martin was wise to take the money. I think he was wise to take the money. And I think if they execute properly, I believe finger motion can get to $2, $3, $4, $5 a share. And once it's there, assuming that short position still is causing pain to prime brokers, you might see some magic in that hat that he found. All right, it's 140. Let's see where the stocks are trading. GME still down. HUHU's down 29 cents. Magoo is back down. Railtown is 28.85. NIXX is down a penny. That might be attractive. And I don't have finger motion here, so let me look up finger motion. Finger is 162, looking good. Strong volume. And GBUX is no trade. Okay, there it is, 590, up 80 cents. Let me see if there's no news or anything. So Frankie says NIXX resistance level is going to be obsolete in a short squeeze. I think Frankie's right. I think NIXX has a chance of going to 8, 10, 12 range, maybe higher. But to me, on NIXX, when the volume is high, that's when, remember, I don't own I own a tiny position. I would get out then. And if I miss it going to 30 or 40, I miss it. But it could have this is the old recruiter.com, and there's a huge short position out there if indeed that short position can get caught out. And short squeezes happen. Look at what happened to Magoo just now. Richard K. I know, I miss Lucky so much. I've been missing him a lot. If MMTLP is the tip of the counterfeit shares spear, do you think it will motivate the Trump team to make a big financial example to send a message? No, I don't think so. Just out of the blue, I think they need a plan, and he's he's not going to listen to me about it. I guess he's going to have a chance to hear Ham's ideas. But if it were me advising Trump, the Trumpster, as my sister when she was younger might call him, but I say that respectfully, very respectfully, playfully, I say it. I would just focus on the engine of American capital and the engine of ideas and factories and business. I would just focus on the over-the-counter markets all the way up to NASDAQ. And I would leave the New York Stock Exchange alone. If they want to separate the American Stock Exchange out, I guess you could make an argument. But anything that trades where it can be abused by Canada, by Europe, and trillions of dollars of American wealth can be transferred to a handful of men. Who were these men? I wanted to be a nurse. Whatever induced you to keep a copy of an obscure document? But that's what our system's set up for now. And while they distract us, it's just a handful of men getting the reward. And they're not smarter than you are. They do not know anything except cheating and war. And they'll make a lot of money rebuilding Ukraine. A hell of a lot. They make a lot of money supplying the weapons and the defense contractors, and they'll make a lot of money rebuilding it. All in the name of democracy. So I think they could send a message in one sense. They could arrest somebody. They could indicate that they're going to start down the road enforcing the rules, but that just buys time, and these criminals are very good at deflecting, arguing, changing the subject, making you feel bad, making another crisis show up all along while they keep moving their agenda forward. And that is what will happen if he does it by half measures like that. So to me, Richard, the best way to do it would be, like I just said, take a few months, maybe, I mean, it's not that hard, actually. Maybe take a month. Go get the graduating class from Howard University Business School and GW University Business School and the Mason School of Business of William and Mary, and get them all to work together and write up the terms. Take over these markets on an emergency basis. Put a military tribunal in charge to enforce the rules. And like I say, get rid of short sale selling of any kind in these markets, at least for a period of time. Never allow counterfeit. Do it all physical trading, no street name, no high frequency trading, no order sales to Citadel, and all the other things I've said, full disclosure of who the investor are, all that. And I think they could make an example. But if they do it just making an example, the risk he runs is he destroys the value of the U.S. financial markets, the banking system, our dollar. Is too much risk. It's way too big. It's way too big. So no, I don't anticipate Trump doing much. Now, Ham says that there's people he's talking to with DJT and all the rest that he expects something, and of course Musk has had this happen with Tesla, so it's possible. But the way you phrased it, I don't think he's just going to lob a bomb. I think he'll lob a bomb once he has a plan in place. And I don't think it takes too long to have a plan in place. So it could happen very quickly. I really think it's as simple as segregating the small cap market from the big boys market. Let them take care of themselves up there, but protect the small cap market from the banksters. That's what I do. We're all, I don't know. We're all blinded by our faith that the system is a level playing field, that someone cares. They don't. I do think it's interesting. The one area which in some ways on the margin has been corrupted, certainly with the wokeism of some of the judicial appointments. But in general, it takes a long time. It takes a long, long time. But in general, the legal system in the United States and the lawyers that use that legal system can protect investors' rights and can change everything. But it costs money, and you have to, brick by brick, put facts into the system in order to get the courts to see in black and white what's going on. You need discovery. You have to fight the really well-financed law firms. You have to fight the Congress, I think. You have to fight the regulators. You have to fight the lobbyists. You have to fight Goldman Sachs. You have to fight Cohen and Griffin. It's a heavy lift, but the one area of the United States system that could rescue us is the lawyers, the legal system. The other thing is you guys. I mean, the incredible grassroots efforts can change perceptions, and I still have faith in that. I still have faith in our system, but to change it, we have to see it for what it is. We cannot have illusions. No one on Wall Street is looking out for us when we trade over-the-counter stocks. No one. No one. Hey, Jeffrey. Barry Crouch, need a month in the Bahamas to get away. I know. I'm pretty much on edge and stressed out, and I miss my dog. Yeah, it's good advice. I should go to the Bahamas, or I should go to somewhere, Dorado Beach, or go to Cameron Highlands. I don't know. You're right. Sorry, but if Martin did another bad deal, you can't say he didn't know after he got the first one business. No, I haven't seen the documents he saw. Maybe they've been filed with the SEC, but unless you suspect chicanery. There's no obvious flaw when you do at the market offerings or at the market warrants. But it's like all of us, David. I don't know what example to give you. When you pull into a truck stop and you go up to the pump, you expect that a gallon is a gallon or a liter is a liter. And you expect that the fuel mix is as it's stated. And, you expect the food is clean, the showers are safe, the ability to sleep in the cabin is assured. You take for granted driving down the highway is going to be safe from roving bandits. That's how we see the market. We see it as safe, and the over-the-counter market is totally set up for, my guess is the players are not bigger than I don't know how many people. Anyway, just to give a number, I bet the players that do this is not more than 1,000 people. It's probably less than that. And the only way to get rid of is to call it what it is. I agree with you, David. CEOs should not do business with Roth Capital until Roth Capital proves they have real clients and that they will do a roadshow and actually go through the effort of doing it. Otherwise, don't raise the money. I think the NASDAQ, I think Adina Friedman has the absolute responsibility. Otherwise, she's breaking the law herself, to make a full disclosure on every prospectus, on every piece of literature, on every advertisement. If you list your company on the NASDAQ, you will be subject to criminal short selling on an industrial scale because we do not enforce settlement. We look the other way. We have a conflict of interest because my salary is paid for by the prime brokers and the hedge funds, Adina Friedman. And then she should put on every bit of communication that goes to investors. NASDAQ does not care about settlement of your trades. When you put up your cash, you put up real cash, but what you're buying is the future, the promise of future settlement. And this could extend the float of the stocks you're buying into billions of shares, which don't exist. And the high likelihood of any stock you invest in that has a NASDAQ imprimatur is it will be delisted and your investment forfeit, because I, Adina Friedman, do not care about you or the CEOs. I am here to protect Carlyle Group, SAC, Citadel, Goldman Sachs, and the whole lot of the corruption that pays my $2.5 million a month. I, Adina Friedman, work for the criminals. She needs to make full disclosure, because that's the facts of the matter. Well, this is true. So now what? The point you're making is that it means there'll be more shares to be bought back. But, and I agree with that. If we can catch them out, the two things you need is a surprise, and then I've already said it, an identity that's easy to talk about and just predictable growing earnings, and we can catch them out. We can catch them out. You're right. What happens the next time he goes back to with Roth? Yeah, what happens? What happens? If I were he, I'd tell Roth, I want to be able to object to any client that you give this money to, that you give these shares to. And I'm not going to do it 10% below market right now. And I expect you to maintain an orderly market. I would put several restrictions in there, and I know Roth Capital will do that. Roth Capital agreed to those terms in the NIXX case, and they'll do it here. So I think that's what they should do. I don't, David, I don't know that he's going to go to Roth Capital again, because I've already said, to me, the most logical thing would be for SAIC to link up. Great job bashing finger. All right, I'm going to sign off with that. Ricky has summarized it, and it shows that I can't win for losing. All right, so let's let Ricky's summary of my talk go forth to everyone. I just bashed finger. Thank you, Ricky. I'm going to wish everybody a happy afternoon, and we'll talk tomorrow.